All right, we begin with our top story this hour. The Bank of Japan exiting negative interest rates it's been in for the past 17 years. It's a new direction for monetary policy. We're going to be speaking with our guest, PhD economist Daniel Lacalle, chief economist at Tressis, about that, plus other news that is making the rounds across the business environment. Daniel, good morning to you. Thank you so much for joining us. What do you make of the decision of the Bank of Japan to exit negative interest rates?
Well, I think it's very important because, as we have seen in the past year, the yen, the local currency of Japan, has been weakening very aggressively. And the Bank of Japan's policy of constantly monetizing debt and increasing money supply has generated a very significant weakness in the currency and therefore a level of inflation that is unjustified for such a developed economy. So I think it's the right thing to do. I think that they need to be actually a lot more assertive about that policy in any case.
Banks, we've already heard from Japan. We've heard from the Reserve Bank of Australia. I think they held rates. We hear from the US tomorrow. I think the UK on Thursday. Are we in a dovish environment? Do you think that rates are going to be held across the board? How are you seeing the global inflationary environment right now?
Well, the global inflationary environment is certainly one of persistent inflation. The level of disinflation that we saw in 2022 and 23 has sort of stopped. And what we see right now is that there is a concerning trend of elevated core inflation, with another factor that is starting to creep up in inflation figures, which is the rise in energy prices. So the dangers of being too accommodative and certainly way too dovish for central banks is that this problem of persistent inflation perpetuates. So the decision of many central banks, particularly the Federal Reserve and the ECB, to hold rates makes sense, but they need to look at the data, see if things improve in the second part of the year, because obviously right now what we are also seeing is that the global economy is improving a little bit with the new figures estimated from China, and that certainly generates more inflationary pressures. So central banks will have to be cautious, and I think that they have to be aware of the fact that inflation is way too high still compared to where it should be.
All right, speaking of which, what do you make of the latest numbers from the Eurozone? We saw further deceleration in February for the wider EU area and the EU and the Eurozone. But what do you make of those numbers and what the ECB could do? Because I think we're hearing from Christine Lagarde later this week.
I think that the figures from the Eurozone are actually pretty encouraging. We see a significant trend of disinflation that is still above the ECB target, but a positive trend. And I think that that is an important element. But I think that the ECB needs to be at the same time very aware that the majority of that disinflation trend has come from an anomaly, which has been a year of declining energy and commodity prices. So now that commodity prices are starting at least to stabilize, and in the case of oil, go up again, probably what the ECB will likely say is that they are positive about the outcome on inflation. It is very logical also that they sort of maintain a certain level of caution relative to very aggressive and certainly a lot of rate hikes. I think that there will be a lot less rate cuts than estimated, and certainly less rate cuts, and as well in a smaller proportion relative to what consensus seems to be estimating.
Speaking of consensus, what do you make of let's move over to Asia now. China, the latest numbers, the industrial data, retail data, the property market crisis. What do you make of the latest numbers coming out of China? Is it encouraging?
Certainly, the latest numbers coming from China are very encouraging. Industrial production is bouncing very rapidly, and more importantly, the part that comes from technology and information, all of those are rising very, very fast. And those are positive signals of an economy that was starting to show very concerning trends. And obviously, China is not going to be able to absorb the impact of the real estate contraction with other sectors rapidly because of the size of the real estate and the construction sector. But at the same time, it is the only economy in the past 40 years that is going to grow above global trend with such a significant reorganization of the real estate sector. So, all of those elements show that China is doing relatively well, that there are significant challenges, that the economy does not need a massive stimulus package because it's going to grow at about 5% in 2024.
Thanks for that. I want to go to the US, the Nvidia Developer Conference. They unveiled a new chip. What do you make of the artificial intelligence craze? Is it overhyped, or can it really lead to improved productivity?
Oh, artificial intelligence is going to be a very significant driver of productivity improvement and certainly of improvement of labor conditions for the vast majority of citizens. I think that there's probably way too much expectations about artificial intelligence in the short term, and certainly way too aggressive expectations about the profits that artificial intelligence may generate for technology giants. Artificial intelligence is a key driver of the technological revolution, but it'll take more time and certainly generate less abundant profits than what probably many people are expecting and expecting to happen very, very quickly, which is very unlikely.
All right, I want to get to, I think you're from Spain, if I'm correct. The situation in Spain with respect to SMEs, Spain has pretty low inflation, which I assume would mean low borrowing costs for SMEs, but we're seeing a record, well, not a record, but a high amount of closing, about 700,000 SMEs closing in Spain last year. Well, what do you think the issue is over there?
Well, I think that the issue is something that we are seeing almost in every developed economy, but particularly in the economies that have sort of maintained a certain level of GDP growth by massively increasing government spending. In the case of Spain, what that means is that, yes, large corporations are doing adequately, that GDP looks good because government spending is the largest part of the growth, but small and medium enterprises are suffering a double pinch. On the one hand, persistent inflation, as we mentioned before, even if that inflation has been reducing, but it's still persistent, and we all have to remember that inflation is accumulative, and also a very high level of taxation, added to the increase in rates. Although borrowing costs are not dramatic, certainly they have risen. So higher inflation, higher taxes, and higher borrowing costs certainly creating a very significant impact on small and medium enterprises, which are 90% of the companies in Spain.
Finally, touch on Bitcoin very quickly. You've seen the price go as high as, 72,000. I think it's come back down to about 63 now. Well, what's your outlook on Bitcoin and the price action and movement we've seen recently?
The price action on Bitcoin has been driven by the optimism in general about markets. We have seen how Bitcoin rose very rapidly, as well as gold, as well as technology equities, as a very volatile and high beta financial instrument. Bitcoin has risen very quickly. But we need to be a little bit prudent in terms of expecting the price to rise constantly. So volatility is likely to exist, and we should expect some choppy months for Bitcoin after consolidating the 62,000 previous high, and therefore some choppiness, levels of risk that obviously do not necessarily mean that it's going to tank, but We cannot expect Bitcoin to simply rise every day, every month, and reach all-time highs almost every month. So I think it's more of a wait and see period to see new developments in terms of its ability to become a real currency.
Dr. Lacalle, Chief Economist at Tressis, thank you so much for joining us to talk about the global economic matters. Really appreciate your time this morning.